Hey everybody, Courtney Smith here with our August 9th Wall Street winners since 1995. We've been doing this. Awesome. Crushing the competition for 20 years. All right, so what we have is this continuing theme here. So you can see that we're making higher highs, and we made higher highs on Friday, but the RSI, which is that little green line there, which is a momentum oscillator. It measures the momentum of the market, and you can see that the momentum is getting weaker and weaker and weaker. That's the green line, and it's making lower highs while the price is making higher highs. Now, the other thing to notice is the purple predictor has started to get negative. It's below the price. If it's on the price, it's neutral. But when it's below the price, that's negative. So let's keep going for a second. Dow Jones, same RSI divergence here. And you can see that buying and selling pressure are very equal up here. We're not really seeing either one of them dominant. What about the NASDAQ? Well, the NASDAQ's got a much stronger purple predictor. So we're going to say right now that we're going to see NASDAQ type stocks, technology, biotech, outperform the Dow type stocks. But the same failure here, the same lack of upside momentum. So typically what happens when you see this, and I'll tell you what, I'm going to go back over here to the S&P because it's clear. But when we got the first momentum divergence back here at the beginning of July, the market took a dip. We're going to see the same thing. We're going to see the same dip here in the market probably this week, because these RSI divergences on the daily chart like this, they happen as soon as the divergence occurs. So look for a divergence. We already have the divergence. Look for the stock market to move down a little bit this week. Not a big deal, but a deal. Okay? All right. Look at this chart this is the Russell 2000, completely sideways now going on. This chart goes back to the beginning of March, but boy, that's been dead. And this gives a good idea of what the average stock is doing. The S&P, NASDAQ, they're dominated by huge mega cap stocks, and as a result, they keep moving higher, but the average stock, not really. Another change here in our seasonality. We finally broke above the this red line that I said, where if we see we're in a bullish seasonal period all through here, but the price didn't confirm. It's now confirmed. We're going to get long utility stocks. And in fact, we're already long utility stocks, okay, because it broke to a new high. Now, this seasonality ends in a couple of months, but we can still make some good profits in the next 2 months here on the bullish seasonality. Now, I told you a couple of weeks ago that I thought that the purple line, which is up here, is the likely seasonality for the rest of the year. And as you can see, it's quite bullish, this purple line here. I said the alternative was the red line, which is far more bearish. Now, they were very similar up until the beginning of August, and then they start to move in opposite directions. Right now, the purple looks like the best representation for the rest of the year, but we also have to keep an eye over here. So if we look at that divergence that we were just talking about, it could just be this is a 1% decline. That could be it. This closer to a 2% decline. But nonetheless, right now we're going to stick with the purple line because it's describing price action better than the red line. But let's always be intellectually honest and say, well, it could be the red line. Asset allocation perked up. Wait till you see the bonds, man. They got hammered. So people took their money out of bonds, put them into those big cap stocks, many of which have dividend payments far larger, far higher than the interest on a bond. So if you're on fixed income, or if you're an insurance company, or if you're any type of person or institution that needs interest, are you going to put your money in bonds? No, because they don't yield anything. You're going to buy big mega cap stable stocks because they yield twice as much. Our stock market risk indicator breaks to a new high. That's bullish as well. That's why our RSI divergence dip should just be a small one, okay? Maybe 1%, maybe 2%, that's all. because we're starting to see lots of other things that are bullish in the market. Global shares doing pretty good. Now the yield curve perked up a little bit here because the bonds got hammered, so I think that's helpful. I think seeing the yield curve move back up, I would like to see that. That would be bullish for the market. And bonds, you can see, here's a big gap down here. Volume not super heavy, so we can't put too much strength on this dip, but nonetheless, it is a dip. And I really, well, let's take a look. Here's our factors on bonds. So the blue line is the most important one, and it says lower interest rates. The price of gold, lower interest rates. Only the CRB says higher interest rates. So we can't get too excited that we're going to see bonds move in either direction, quite frankly. Now, if the bonds are coming down, interestingly enough, the dollar skyrocketed. I mean, that's one of the biggest moves in the dollar we've seen in a long time. There's a day back here and then back here. But it looks like we're starting another leg up on the dollar. That's actually bullish for the stock market because it usually means money flows into the United States to buy stocks because foreigners can make money on the stock going up and on the currency going up. So this is a helpful factor for the stock market. You're not going to see this analysis anyplace else. But if the dollar is strong, gold is weak. Let me stop here for a second. We put out a big video. You can go to YouTube and watch it on our channel, where I was very bullish on gold. I think the analysis was fantastic. So if I'm bullish on gold, there's a couple of messages here. So what? How do we play these themes? Well, let's say the theme was 100% correct. Then we would have broken these highs and gotten long gold. This is why we buy on strength. Our buy orders were above these highs. We never got filled. So we never lost any money. I could be bullish and never lose money because the strength, the market didn't agree with the theme. And all that matters is I have to do what the market tells me to do. The market never broke these highs. We never got long, so we never lost money. Now, what's going to happen? This is pretty strong price action. We broke these lows. That's pretty strong. Certainly looks like we have the momentum to break these lows, which would be pretty bad. So it looks like the theme for gold is not going to come true. Well, why not? Well, we saw interest rates move in the wrong direction. Interest rates moved up, and that's bad for gold. It may be that the Indian wedding season is really on hold again for the second year, or it's going to be very muted, or they bought all the gold they wanted last year for last year's wedding season, which didn't happen, so they don't need to buy gold this year. So there's a couple of things here that could and maybe are going wrong with our gold theme. But the point is, the tactics we use always force the market to agree with the theme before we get long. We don't get long just because we're smart. No, we get long because the market tells us to. Okay, our indicators are really a bit negative here, as you can see. Crude oil also, look at, here's another message. And the message is the economy is not doing as good as people think. You see, one of the unique forms of analysis is that I like to look at real-time indicators. Everybody else likes to look at government indicators, which are a month old, 2 months old, a quarter old. I mean, that's looking that's like looking in the rearview mirror. No, I like looking at leading indicators of the economy. And what we're seeing is that they're a mixed bag right now. But one of the key factors that tells you what's going on in the economy is crude oil. And you can see it's in a clear bear market. Not a great bear market, but it's a clear bear market. We're making lower lows, lower highs. And I'm developing another theme, which it'll take me another few days to do the research on it. And so I'll probably release it to you next week. But it's not a bullish theme. But let's keep going here. Bitcoin rallied up here with that stop loss there, and we broke through the 55-day high. So you should be long Bitcoin again. You can see that the purple predictor has rallied strongly here. It was quite weak back here, so we were able to call this dip in the market very, very well. And then we told you, purple predictor's starting to look good. We didn't break these lows. So last week I told you we got to start looking at thinking about the long side. There's our buy point right there last Thursday. All right, freebies, love having you here. Fully paid up members, hang on just a second. But of course, freebies, what? Why? This is such a peanut, this newsletter. Subscribe. Go to WSW2021.com to subscribe. WSW2021.com.